All right, guys, today is day 6 of our challenge for mastering swing trading and part-time trading. We've been talking about managing risk the past few days. We talked about our overall account. We talked about setting stops. Today, we're going to talk about the target. And then next time, we're going to talk about putting it all kind of together with the stop, the target, and our overall account. And that'll be reward to risk. So today, when we talk about targets, now, we talked about stops, and we really focused on defense and protecting our account. But at the same time, you need to increase the levels of your account. And that can be accomplished in one of two ways: a higher win rate when we're talking about targets, or bigger wins than losses. One of those two things has to be happening. It's really hard to sustain a very high win rate. There are a few people can do it, but for the most part, it's almost impossible. The way you really do it as a swing trader is making sure your wins are bigger than your losses. Now, there's a lot of ways to do this, and we'll talk about this when we get to reward to risk, whether you get 1.5 to 1, 2 to 1, 3 to 1, 4 to 1, however you're doing it. And when I say 4 to 1, that means for every $1 you lose, you would win 4. That would make 4 to 1. But that's what we focus on, bigger wins than losses. So how do we actually achieve this when we think about taking profits? Now, when I think about the stock I'm trading, there's really 4 things I'm thinking about. One is, this was our first lesson when we talked about market analysis and analyzing the direction of the market, what the market's doing. And we mentioned there that it'll impact how we trade and how we set our targets. And that's the first thing we're thinking about. What is the market direction and what's the strength of the market? If it is a really strong market, I'm willing to go for bigger wins. If it's a really weak market and I'm shorting, I'm willing to go for bigger wins on the short side. But if I'm in a range bound or weak market and I've got a long position, I'm going to be a little more hesitant to go for that really big win, and I might cut my target shorter than normal. So that's one of the things we have to think about. The first thing I think about is the overall market itself. And we talked about that before, that's the starting point of everything I do, is what's the market doing? Even though I'm not trading the market, I'm trading the stock, I want to know that. Number 2, now for the specific stock I'm trading, what's the volatility of the stock and what's the stock's history? Does it tend to make big moves? Does it tend to be really volatile? If it's a volatile stock that has a history of making big moves, obviously I'm going to go for a bigger win. But if it's a really slow moving stock and historically it tends not to move that much, obviously I won't go for the bigger win. It wouldn't be smart to go for a 10-point win when this stock usually only makes 5-point moves. So we think about the volatility of the stock itself. Then we want to think about key resistance levels. If I enter at this level and there's resistance up here, whether it's a moving average, price action, whatever it is, it's not likely price is going to break through. So I'm going to think about that when I'm setting my target. Where is that resistance level? And finally, where did I place my stop? If I placed my stop 10 points below and the appropriate target range is only 5 points above, I can't take that trade. Even if it's 1-to-1, I'm probably not going to take that trade. So if I'm risking, let's say I'm risking 5 points, I need to make sure I'm getting more than 5 points on my win, and usually even higher. Usually I'm going to go for 7, 10, 15 points, trying to get 1.5, 2, 3 to 1. So these are the 4 things I'm thinking about. Now let's go back to our Netflix example. We've been talking about Netflix as we've been going through this, and we know I entered Netflix here at 314, and I entered here at around 350, exited here around 355. Now, what led me to do that? So with that 314 entry, my stop was about 10 points. So I was risking $10. Now, we know here that the top of the range, this is that resistance level. And actually, before I get to resistance, let me go in order. In terms of our market analysis, we were in a pretty strong market in this period. So I knew that. So that was one factor we were looking at. We looked at the volatility of the stock. We knew Netflix is a volatile stock, and it has the ability to make 20, 30, 40, 50-point moves. So if I want to try to get 30, 40, 50 points, I know Netflix can do that just by looking at the previous runs here. So these are all good factors in terms of being able to take a a higher target than normal. And then I looked at the resistance level. We did have a resistance level here right in the 335, 338 range, which would have given me 20 points, and I could take that trade. 314 to 334 would be 20 points, and I was risking 10, so I could get 2-to-1 on the trade. But as you know, I got out at 355, which made it a much bigger win, an extra 15 points. Now, why was I willing to do that? It was because of those factors I talked about. I like the market. I like the history of this stock. The stock was breaking out nice. Specific to the stock, we're going to talk about all this stuff later. I like the setup. I like the volume pattern. I like some of the news that was coming in. I like the sector, the space it's in. All of these things were aligning to say we're going to go for a bigger win here, and that worked out. So these are the factors I'm using when I'm setting my targets, and Netflix is a great example of that in a spot where we'll actually set a higher target than normal. So that's setting targets. Now, what I want you guys to do is, you've been doing this already. You've been going back to the FANG stocks, Facebook, Amazon, Netflix, Google, Apple, NVIDIA, and pick some other stocks as well. I want you to pick spots you could have entered. Like, let's just take Netflix here. Now, where would your stop been, and where would your target have been for this trade? Just because it moved this many points doesn't mean we would have had a target there. But what would have been the right thing to do here? Look at the market, pull up SPY, pull up the NASDAQ, which would be QQQ. Look at the history of Netflix, and ask yourself, look at, are there any resistance levels in the past, which there were, and ask yourself, where would have been the appropriate spot to take your target? And do this for a lot of specific spots on the chart where you think you could have taken trades, and do this for a lot of different stocks. And by doing that, you're going to get a good feel about where you should be taking targets. So that's the lesson for today, targets. Next time on day 7 of the challenge, we're going to put it together with reward to risk ratios.